The technical setup. So, let's start with what the charts are telling us, because price action doesn't lie. Pi coin is currently consolidating inside a textbook symmetrical triangle pattern, and if you know anything about technical analysis, you know this formation is basically a coiled spring just waiting to release energy in one direction or the other. Right now, Pi is trading between two critical levels, support at 21.2127 cents and resistance at 23.17 cents. That support level at 21 cents has been tested multiple times, and every single time buyers have stepped in. That's not random, that's accumulation. Smart money is building positions at these levels while retail traders are either ignoring Pi entirely or waiting for confirmation, which usually comes too late. The resistance at 23.17 cents represents the upper boundary of this triangle. Price has touched this level repeatedly but hasn't broken through with conviction. Yet, here's what really matters. Symmetrical triangles resolve with explosive moves. The longer price compresses within this pattern, the more violent the breakout becomes when it finally happens. If, and this is the critical if, Pi breaks above that 23.17 cents resistance with volume, the next technical target sits at 25.35 cents, but that's not where this story ends. A sustained move through that level opens the door to 30 cents, which represents a 36 to 40% gain from current levels. That's not hopium. That's a measured technical projection based on the triangle's height and standard breakout mechanics. What makes this particularly interesting is the timing. We're not looking at some random consolidation in isolation. This technical pattern is forming simultaneously with major fundamental developments that are creating actual buying pressure. That convergence, technical setup meeting fundamental catalysts, is where the most explosive moves happen in crypto. Open Mainnet revolution. Now let's talk about why this isn't just a technical play. It's a fundamental transformation happening in real time. Pi Network's Open Mainnet just launched, and if you don't understand the significance of this, you're missing the entire picture. An Open Mainnet means Pi is no longer operating in a closed, controlled environment. Validators and users can now interact directly with the blockchain without intermediaries. This is the shift from centralized testing to genuine decentralization. The moment when a project moves from promising concept to functional infrastructure. Scalability is the immediate benefit. With an Open Mainnet, Pi Network can handle significantly more transactions, support more users, and provide the foundation for the ecosystem expansion that's already underway. Without this infrastructure, everything else is just vaporware. With it, you have the technical backbone to support real adoption. But the Open Mainnet isn't launching in isolation. Pi Network has integrated smart contract capabilities, which completely changes the value proposition. Smart contracts enable developers to build decentralized applications, dApps, directly on Pi's blockchain. We're talking about DeFi protocols, gaming applications, NFT marketplaces, payment systems, any use case that requires programmable, trustless execution. This matters because it transforms Pi from a simple payment token into a platform token. Platform tokens have different value drivers than payment tokens. They benefit from network effects, developer activity, and ecosystem growth. Every dApp that launches on Pi Network creates additional utility and demand for Pi coins. That's not speculative future value. That's mechanical demand creation. The combination of Open Mainnet plus smart contracts is what serious blockchain projects need to compete in 2025 and beyond. Pi just checked both boxes simultaneously. That's not incremental progress, that's infrastructure completion. DEX Infrastructure. Live. Let's talk about the third piece of this puzzle, DEX integration. Pi Network now has a functional, decentralized exchange infrastructure built directly into the Pi wallet, currently available for testing. This includes automated market maker, AMM, functionality, which is the engine that powers liquidity provision and asset swapping in DeFi. Why does this matter? Because DeFi isn't some niche corner of crypto anymore. It's the primary use case driving blockchain adoption. Users want to trade, provide liquidity, earn yield, and participate in decentralized finance without centralized intermediaries. Pi just gave them the tools to do exactly that. The DEX infrastructure creates immediate utility for Pi coins. Liquidity pools require Pi for trading pairs. Transaction fees get paid in Pi. Yield farming opportunities will use Pi as a base asset. Every interaction within this DeFi ecosystem creates buy pressure and removes Pi from circulating supply when it's locked in liquidity pool. Real quick. If you're finding this analysis valuable and you want to stay ahead of breakout opportunities like this, hit that like button right now. It tells the algorithm to push this analysis to more traders who need to see it. And if you're not subscribed to TJ Crypto World, what are you waiting for? subscribe and smash that notification bell because when Pi breaks that 0.2317 resistance, I'll be dropping an immediate update with exact entry and exit levels. Don't miss it. Alright, let's keep going. The AI integration edge. Now we get to something most people are completely overlooking. Pi Network's AI integration through their partnership with OpenMind. Over 350,000 active nodes are now supporting AI-driven tasks, including image recognition and other computational processes. This is where Pi starts to differentiate itself from standard blockchain projects. The intersection of blockchain and artificial intelligence is, honestly, one of the most promising frontiers in technology right now. Blockchain provides decentralized infrastructure, transparency, and trustless execution. On the other hand, AI brings computational intelligence, automation, and data processing capability. When you combine them, you get decentralized AI networks that can't be controlled by single entities, can't be censored, and provide computational resources in a distributed manner. Pi is positioning itself at this intersection, which really expands its addressable market beyond traditional crypto users into AI development, machine learning applications, and enterprise use cases. The 350,000 active nodes represent real infrastructure supporting real computational tasks. This isn't theoretical, it's operational right now. As AI continues to explode in importance across every industry, blockchain projects with genuine AI integration will have significant advantages. Pi is building that capability while most projects are still figuring out basic smart contracts. So let's connect all these pieces into a cohesive investment thesis. We have a technical setup, symmetrical triangle with breakout potential, meeting four simultaneous fundamental developments: open mainnet providing scalability, smart contracts enabling dApps, DEX Infrastructure creating DeFi utility, and AI integration expanding use cases. Market analysts are increasingly positioning early 2026 as a potential inflection point for Pi's growth phase. That's not random speculation. That's based on the convergence of ecosystem maturity, infrastructure completion, and expanding real-world utility. Here's the critical insight. We're potentially sitting at the bottom of an upward cycle before the market fully prices in these developments. The technical consolidation we're seeing right now, that's the market digesting these changes, accumulating positions, and preparing for the next leg up. So, the 30-cent target isn't just some technical projection, it's more like a fundamental repricing based on Pi transitioning from a promising project to a functional ecosystem. If Pi manages to execute even half of what's currently being built, 21 cents will look like an absolute gift in hindsight. But here's what separates intelligent traders from gamblers. It's all about confirmation over prediction. Sure, the setup looks compelling, and yes, the fundamentals are strengthening, but you wait for that breakout confirmation above 23.17 cents before going aggressive. You don't anticipate, you react to validated signal. Alright, let's get tactical. If you're considering a position in Pi coin, here's the framework you should be using. For your entry strategy, watch that 23.17 cents resistance level like a hawk. A clean break above, with expanding volume, is your confirmation signal. Now if you want to enter earlier with more risk, you could scale in at current levels with a tight stop below 21.27 cents support. But remember, that's a higher risk approach that requires discipline. Position sizing matters. Don't go all in on a symmetrical triangle hoping for the best. Size your position so that if it breaks down instead of up, you're not devastated. Use proper risk management. If your stop is at 21 cents and your entry is 22 cents, that's a 4.5% risk. Size accordingly. Targets. First target is 25.35 cents after breaking resistance. That's where you consider taking partial profits, or at least moving your stop to break even. Extended target sits at 30 cents, which is where the 36 to 40% gain projection completes. Don't get greedy. Take profits at logical resistance levels. Timeline. The symmetrical triangle is reaching its apex, which means resolution is coming soon, likely within the next few weeks, possibly sooner. These patterns don't consolidate forever. The energy is building, and it's going to release. Before we wrap, I need two things from you right now. First, if this breakdown gave you actionable intelligence on Pi Coin's setup and strategy, hit that like button. It genuinely helps this channel grow and reach traders who need this analysis. Second, subscribe to TJ Crypto World and turn on all notifications. When Pi breaks that resistance level, I'm dropping an immediate update with exact positioning strategy. You want to see that video the moment it drops, not 3 days later when the move already happened. Alright everyone, that's the complete picture on Pi Coin's 40% breakout potential. We've got a symmetrical triangle with support at 21 cents and 27 hundredths, and resistance at 23 cents and 17 hundredths, four major fundamental catalysts with open mainnet, smart contracts, DEX infrastructure, and AI integration, plus a technical setup pointing toward 30 cents if breakout confirmation arrives. Huge appreciation for investing your time here today. Your attention is valuable, and I take that seriously. If you want deeper analysis on other altcoins showing similar technical setups with fundamental catalysts, I've got a full playlist of breakout analysis videos. Check the card popping up on your screen or the link in the description below. There's serious alpha in that content. Until next time, this is TJ from TJ Crypto World. Stay disciplined, trade the confirmation, and I'll catch you in the next breakdown.